channel. I am Prabhu KB, CEO of Fibocan. As you are aware, we are into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through our technology products and solutions. Victory meaning victory, innovative investment strategies, so far, Stonifar and Baumits. They are very powerful and efficient strategies, work on all market conditions. In every video, we discuss what happened, why it happened, what will happen, why, when and how it will happen. Which is why I request everyone to watch the video till the end, click the bell icon, encourage your friends and known person to subscribe. Today is February 18, 2023. As always, in Saturdays we put our global market videos. That is Dow, Nasdaq, S&P, FTSE, dollar index, commodities. That is Brent and NYMEX and US 10-year yield. Okay. So to begin with, we'll first discuss about the index. Dow, Nasdaq, S&P, FTSE. Dow closed 33,826.92. It formed a doji, remained flat. That is what, just slightly lower, it remained flat. Nasdaq 11,787. It also 0.5% up, just 0.5% up. More or less, it is also a doji. S&P 4079.09, 0.3% down. It is again another doji, sideways. FTSE 8004.36, 1.25% up. So if you recollect, last week, what did we say for particularly for all the indices including FTSE? We said that it is going to be a sideways movement with slight downward bias. Precisely, market has happened that way, excepting FTSE. When I come to FTSE, I will tell you what it happened. So Dow, what happened? Third week in succession, it has formed a doji. So which is an important aspect to note. In fact, if you recollect, we have been telling that this month itself it is going to be a sideways month. That is what is happening now, and we expect another sideways movement in Dow also. Before that, Dow, it is now below all the, in the daily chart, below all the key exponential moving averages, which is not a good sign for Dow. It formed doji, third week in doji, and in the monthly chart it has formed a doji and slightly above the Bollinger monthly middle band. So when we expect it to, at this point in time, it is below the previous month's close. We expect it to close above that by the end of the month, and we expect another sideways movement, probably with sideways, very sideways movement. I mean, nothing much can be inferred out of it. Why? Because it had a dramatic fall on Thursday, and Friday it fell, but it formed a reversal in the 5-hour and 1-hour chart. But it is not a good enough reversal for it to take a move up in a big way on Tuesday when market opens, because Monday is a US market holiday. Next is Nasdaq. Nasdaq is now below the 8 and 10 exponential moving average, but it is managed to stay above the 20 exponential moving average. So Nasdaq, if you recollect, we had said that the crossover has not happened. What is that crossover? 50-day has not moved above the 200-day. While in Dow and S&P it has happened, which is good for Dow and S&P, but Nasdaq till now it has not formed. Also, if you recollect last week, what did we say? It formed the first reversal in the weekly chart near the Bollinger upper band. Hence, we had expected sideways movement with slight downward bias. That is what precisely it had happened. In fact, yesterday for most part of the time, it was below the 50-week moving average, which is at 11,747.83, where it closed 11,827. So it managed to close the week above the 50-week moving average, but that is going to act as a strong what do you call resistance. Though it is above it, it is trying to hold that level, but it is trying to push it down. So bears are trying to push it down below that level, while bulls are making a significant attempt to hold that level. So while yesterday it held, the second week it held, we don't know. This week again it can be a sideways. That is what we expect. In the month it formed a small green candle, but a shooting star type, a bigger upper wick. We expect sideways, since it is going to be a tough fight. That is what we expect. It is below the February 1st close. If you recollect last week, we said after February 1st there was a gap up opening that happened. So that gap now got filled, and it was the second time now it is below that. But last week Friday, that is yesterday was 17th, 10th of February, it closed forming a doji. After that it opened a gap up. So yesterday it again closed formed a typical same candle as that of February 10th, and we expect some upward bias on Tuesday when it comes. But is it good enough for it to go up strongly? I am not confident looking at the charts. S&P 4079.09. Same thing as we said that happened. It is a second week in succession doji. It is mimicking the pattern of that of Dow. It is below all the exponential moving averages. In the monthly, it is again a shooting star. Doji it has formed. I would say more than a candle, it has formed a doji with upper wick, and again the upper doji with long upper wick. EMA, the monthly exponential moving average, is pulling down, while the 20-day moving average is pushing it down. So hence no, it is getting powerful pull and push down, which is why you don't see big of an up move. So we expect another week of doji. We don't expect significant up move next week, but this month, if next week it is going to form that way, probably we are left only with 2 days by the end of this month, that is 27th and 28th of February. Then what will happen? It will be more or less forming around the same levels. Anyway, next week is going to be very interesting because the key levels are being protected. That is where the tough fight is happening in Dow, Nasdaq and S&P. We have to see, while we are seeing a reversal in the 1 hour chart, good reversal in Dow, S&P, but in the 5 hour the reversal is not good enough, right? FTSE 8004.36. We were slightly surprised by the up move because technically we had expected another sideways in this week, and next week we expected a big up move, but FTSE continued its uptrend. The reason last week we said was, in the monthly chart it is above the Bollinger upper band, and we did not expect it to come below the Bollinger upper band, which is why we had expected a sideways and then the big up move in the last week. But this week itself it made a big up move, and daily it is sliding nicely along the Bollinger upper band, and it's a nice scene to watch for if you're a real bull. You can hold that position because the price is going up, the bands are going up, the Bollinger upper band is going up. It is riding nicely along the Bollinger upper band like going in a winch in a height, right? Something like that. Then you have CBOE VIX. CBOE VIX 20.02. So it formed a weekly solid red candle and below the exponential moving average and Bollinger middle band, and daily also it is going down. I had said that, like what you call, I don't see enough strength in it to go up, hence the volatility is going to be low. Also it formed bearish bar reversal in weekly and daily chart. Next we go to dollar index. Dollar index 103.780. Last week itself, in fact at the beginning of January and February itself, we were saying that dollar index, the fall is arrested in the February beginning we said, and it is going to go up. So 2 weeks of solid green candle, and this week it formed a, in fact last week we said that it will go up, this week it has gone up and it has formed a long leg shooting star, long leg spinning top type of a candle, and closed above the exponential moving average but below the weekly middle band in the weekly chart. This is how it has formed. And in the monthly it has formed till now bullish engulf. We said that January fall will be arrested in February. That is what precisely it has happened. And but below the exponential moving average in the monthly chart, key exponential. Daily it is nicely moving up along the Bollinger upper band. However, the price is, as I explained the last 2-3 weeks of video, it is above the 50-day moving average but below the 200-day moving average. So 200-day moving average is somewhere around 106 point odd levels. That is what is going to act as resistance. In fact, 50-day was hovering around 50-day moving average last week, and it was taking support, and now it has broken that out. But still it is not decisive, I would say. But yes, there is strength is there. If it breaks the it has gone up and it is significantly above that, but it has not broken out decisively, I would say, because we have to wait for one more month before we can say 50 days is acting as a very strong support. Then the next target is 200-day moving average. Now, the components, when we analyze the individual components, Euro versus USD 1.0694. In the weekly it formed doji star. After 2 solid red candles, it formed a doji star. And it is current price is less than 200 week but above the 50 week. It is actually the reverse of what dollar index forms, the USD, Euro versus USD. Daily it is sliding down along the Bollinger lower band, but the bands are showing some exhaustion. So that means the selling is will be arrested at least, okay, in the next week or so. So hence like the bands will start moving in parallel, and then probably the up move will happen. If that happens, the dollar index will fall. So it's all a combination. So solid red candle in the monthly till now, long upper wick and bearish engulf. It is below the monthly middle band till now. So that is where it is going to most likely close. Next is GBP versus Euro, GBP versus USD. It is 1.2035. So weekly it formed a spinning top with a long equal wicks, upper shadows and lower shadows. That means no, it formed a doji star, long upper and lower wicks. So relatively, I mean the market is indecisive. Doji means what? Indecisive. That means the moment they decide, they will go in the direction forcefully, right? In the monthly, same as that of Euro versus USD, there is no change, and bands are slightly better than that Euro versus USD, because bands are already shown exhaustion. Bands have exhausted, I would say. So though it is drifting down, the bands are moving in rounding top. So rounding bottom. That means the selling is arrested. That's very clear. Next is USD versus JPY. It is 134.15. So it will mimic USD dollar index, USD JPY. So it is solid green candle above the exponential moving average, but below the daily middle band. And the price is again between 200-day and 50-day moving average. 50-day is acting as a very strong support. So monthly it is bullish engulf till now, and one key thing in the daily, it is nicely riding along the upper band, and it is above all the key moving averages of all time frames. When I say all 20 exponential, 20-day moving average, weekly moving average, weekly middle band, monthly middle band, everything is above all these moving averages, and it is moving up strongly. So that means you can see that the dollar index, if it gets weak, it has to be due to the strengthening of Euro and strengthening of GBP, and JPY is not going to support it. That's very clear, right? So next is USD INR. That is our interest. We as an Indians know where it is going to go. Unfortunately, it is at 82.750, and the fourth week of green candle. Last week it formed a shooting star type of a spinning top shooting star, or have a slightly green candle with a long upper wick. This week even a smaller candle but gap up opening, but again a long upper wick. So all these points that there is some resistance at higher levels, but notwithstanding that, this is also mimicking the USD JPY candles patterns, chart patterns. It is above all the exponential moving averages and daily moving averages and key averages. So which signifies that USD INR is very strong, and USD INR is going to close the month strongly. Till now it has formed a bullish engulf, and if it closes somewhere around this level, probably we can expect further up move in the coming months. So hence, like I as an Indian, I feel that like little upset that INR is not strengthening against dollar. Of course, there are many other parameters like weak currency will enable competitiveness. So many other factors. I don't want to go into that. So many other factors are there. On the face of it, INR is weak against US dollar. US 10-year yield 3.817. In the week, it formed a solid green candle with slightly long upper wick. We had said that like it is taking support at the 2000. It is taking support at the 50-day moving average, 200-day moving average. Daily, it formed the first reversal on 17th of February, but it formed the first reversal with a red candle. But again, it is on a riding channel on the daily chart. So above all the exponential moving average, all the DMAs, hence there is strong support. But one thing to note is that still it is below the 2022 calendar year close. That means still it is below that level. That means that will act as a very strong resistance. Brent and NYMEX, Brent at 83, NYMEX at 76.31. Here all I can say is that 2 months of doji it formed. This month also it had formed a doji with a long lower leg in the monthly chart till now. But what had happened on Friday, yesterday, it fell significantly, due to which right now we are seeing a slightly big red candle with a long lower wick. That means it went low, but from there it bounced. So what is the levels? What are the levels? In the weekly, it formed a solid red candle after a series of after a green candle last week. It formed a red candle because it was near the Bollinger middle band. From there, it could not take above, and hence the pressure came from there. The pushing down from the Bollinger Band, middle band by the bears, push the prices down. The daily chart it is sliding down. However, the daily it is hovering between lower band and middle band. That is where it is hovering. However, what we see here, which we are told last week and the previous week also, the previous year, calendar year 2022 low is going to act as a very strong support. Also, the 200 week and 200 month, okay, 200 month is what? Around 10 years, right? Is going to act as a very strong support, which is at 70.2029 and 200 week and 50 month, 77.74 and 65.93 on NYMEX and 72.64 on NYMEX. That is going to Brent. It is 77.64 and the monthly average of NYMEX is 72.64. That will act as a very strong support. If that is broken down, we as an Indians and any oil importing company, it will be a bonanza for us. Thank you very much.